Hey everybody, this is Greg Gossett from Gossett Trading and in Mentoring Live. Excuse me, got a frog in my throat there. It is Friday, August 23rd, 2019, and we are now in the final hour of the trading day and again the final hour of the trading week. Boy, this week went fast. As I mentioned quickly each day, I do believe that the closing prices of the day are the most valid prices to make your buying and selling decisions from, and that is why I make the majority of my trades. I sit on my hands and I wait till the end of the day to let me know, where the market makers, where the large financial institutions are going to set the prices at the end of the day. So those are the prices that I make my buying and selling decisions from. Boy, we are having quite a day today. My goodness. Kind of Black Friday-ish. So the Dow is down a mere 542 points, down over 2%. The NASDAQ is down 213 points, down 2.68%, and the S&P is down 65 points, down 2.24%. So we had some international drama this morning when President Trump tweeted out that he instructed firms to find another location to manufacture other than China. So that is not good for the market, obviously, and tech stocks are taking the brunt of that today. So I hope everyone's being careful out there. Hope everyone is position sizing correctly. It's a bad day for sure. We'll get through it. We'll overcome it. These things happen. But again, it's always important that you position size correctly because you never know when something like this is going to happen. Hey, Brian 512 is here. How you doing, Brian? Good to see you, my friend. Glad you're here. Brian says, man, I feel like I haven't been here in a long time. Yeah, it seems like it's been a few days, but I'm certainly glad you came back and proud of you for taking an interest in the financial markets and trading and investing. And if you guys don't know, Brian is our young little protege, 17 years old, not even old enough to open up an account yet, but he's interested. And boy, you're going to be really far ahead of your peers, my friend, by taking an interest and starting to invest this early in your life. It's good to learn to start trading in this, but the most important thing is because you're so young, if you can just put money away each month, whatever it is, 20 bucks, 50 bucks, 70 bucks, whatever your allowance is, or if you get a part-time job, something like that, if you can start putting away that money now each month on a regular basis, by the time you retire, you're going to have a lot of money. But the key is to do it every month and not, when you turn 21, you're like, hey, I need a new jet ski. I think I'll take some of that money out. Put that money away. Pretend like it is gone. Do everything you can to keep your hands off of it. And by the time you're retired, you'll think back and you'll be like, boy, I'm glad I did that because now I have a real lot of money. So, hey, JT is here. How you doing, JT? Good to see you, my friend. How you hanging in there today? Boy, what a market, huh? My goodness. Unbelievable. Just unbelievable. I think you told me yesterday you were 90% in cash, so that was the best position. Remember, you can be long, you can be short, or you can be flat in cash. And all three of them are a valid position. I studied one-on-one with Dr. Elder, and he really tried to drive that point to me. He said, Greg, you don't always have to be in the market. You can be long, you can be short, or you can be in cash. And cash is a completely legitimate position to be in. So I think JT told me he was 90% in cash yesterday or the day before. So congratulations. Yeah, nice being cash. That's right. All right, so listen, the plan for today, as usual, is we're going to go ahead and run the U.S. Legal disclaimer, get that out of the way. We're going to come back. We're going to take a look at my positions. We're going to take a look at when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. After that, we're going to do a few minutes on trader psychology because I like to do that each day. It's the most important part of trading, everybody, is the trading psychology point. Where you buy, where you sell. It's important, but it's not that hard. The real skill in trading comes from managing your emotions in managing a position. So that's why I mention it to you every day. After that, we're going to go through my watch list. We're going to go through each stock one by one. We're going to take a look at all the technicals. We're going to look at support and resistance levels, MACD, RSI, ATR channels. And ideally, as you know, I do mention this every day, but in my opinion, the best setups come when you have a confluence of signals, when you have a combination of signals. The way I look at that is if you get a combination of signals, you get a combination of different groups of buyers coming in. So, if you're looking at a chart and there's really no signals there, there's probably no buyers there either. So, keep that in mind. Big picture, always look where there are going to be some buyers coming in, whether that's an RSI level or a MACD, a moving average, and ideally all three of them together would be best. So that is the plan. And then after the market closes, if you guys have any questions about anything I discussed today, please let me know. I'll try to clarify it for you. If you'd like me to take a look at a stock, I'm happy to do that. If you're having some challenges in trading, and you feel free, and you feel comfortable sharing it on the chat, let me know. Let's talk about it. Let's see if we can work on it and find some kind of solution. And then after that, we'll be done and I'll go hiking. How about that? So, all right, hang tight. I'm going to run the legal disclaimer and I'll be back in about 40 seconds. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. So, let's see. All right. Well, let's get to it, everybody. These are my current positions. All right. So, Advanced Micro Devices. I did buy that back here on the 21st of August. The reason I bought it, we made a higher low. This low is higher than this low, and we had a V2. So, we made a higher low V2. Here's day one. Day two washes out or goes below day one in a substantial way. Day three comes back up, closes above day one, also closed above all the moving averages. That was a good sign. That is why I took the trade. Yesterday we went down. We were able to reverse back up, so I kept the trade. Today, of course, is Armageddon, and my stop on this, my end of day stop would have been halfway of this washout bar. So it would have been the day two bar, the washout bar, this washed out day one. Halfway of that should hold some support. It did not. Now, this is a good example here of whenever I take a trade, I have two types of stops. I have an end of day stop, which is the halfway of the mark, or if we have a daylight today and it just keeps going down and going down and going down, I can't say, oh, I'm going to wait till I have to wait till the end of the market. That's my rule. So I have an emergency stop, and the emergency stop was right here at 30.26. It's 5% below my initial entry. So that did get triggered. I did get out of the position here intraday. I think this has happened 3 times this year where I've hit my emergency stop. Usually it doesn't happen, but you have to have some kind of mechanism in place in case you have a big monster day. You can't just wait until the end of the day. Doesn't matter if you have a 5% stop or a 10% stop. There's pluses and minuses. I prefer to use a 5% stop, but so 30.26 was 5% for my entry, so I went ahead, locked in this loss intraday, and good thing I did, right? I mean, it's much lower now than here, so These don't happen very often, but again, I have my end of day stop, whether that's my moving average, or untriggering a V1, something like that. But I always have an intraday emergency stop of 5% below my entry in case something like this happens. So hope that makes sense. So this chart now is it's a little broken. So it'd be interesting to see what happens going forward. So anyway, I am at AMD here. Took the emergency stop at 30.26. Okay, another beauty. So I did buy DDM back on the 16th of August. The reason I bought it is the previous day we closed below the 200. On the intraday, we went from under the 200 back to over the 200. And that is a good back-tested long-term approach to trading the DDM. The point here is that if you're wrong, you're going to be wrong small. If you're right, you have, unlimited upside potential. The key to profitable trading is having large wins, keeping your losses small. And if you can key off a major moving average like this, if you're wrong, it's not fun, but you're going to keep these losses pretty small. So I did buy it here at 45.96. I do scale out of my positions as it goes my way. So as you can see, this is a good example, everybody, of why I like to scale out when it goes my way. I mean, took some profits here, took some profits here. Don't think hit a profit target there. But today, my trailing stop here, or my initial stop on this mechanical system, was the 200-day moving average, and it looks like it's going to close below the 200-day moving average. So it looks like I'm going to have to get out of here today. But again, I did sell some up here for a profit, which is good, and it also mitigates the loss that I have on the balance of the shares going down. So hope that makes sense. If this closes under the 200-day moving average, I will be getting out of this trade today. S&P, here's our famous S&P trade. Well, I do buy the S&P each and every day at the close, and then I sell it first thing in the morning. I do it every single day. It has nothing to do with support and resistance, technicals, anything like that. And the reason that I do this is based upon this study. This is from Liz Ann Saunders at Bespoke Invest, but you have two options here. First option is you could buy the SPY at the open each day and sell it at the close each day. If you did this, the buy at the open, sell at the close, you'd have returned a negative 13.9% return since 1993 if you did it every day. If you did the opposite every day, which is what I do, I buy the SPY at the close, sell it first thing in the morning. Do this every day. Buy at the close, sell the next morning. Buy at the close, sell the next morning. If you would have used this approach, you would have actually returned a positive 634.2% just by flipping it, right? Buying at the open, selling at the close, you would have lost 13.9%. Buying at the close, selling at the open, 634.2%. So what this chart shows you is that all the gains in the S&P 500 since 1993 have come from people bidding it up in the aftermarket and bidding up in the pre-market and then selling it into the open of the day. So, you can see a clear edge here. The blue line is the buy in the afternoon, sell in the morning. The orange is the buy in the morning, sell in the afternoon. Not even close, right? It's a very clear edge, and that's what you want out of all of your trades. You want an edge. Doesn't mean the edge is going to work every time. There's going to be ups and downs, as with anything, but in the long term, you have to let the edge play out. So you have to take the long-term view on this type of trade, and you actually have to take the long-term view on all types of trading. Everyone that I've run into that has lost a lot of money trading has tried to make a lot of money fast, and it never works. Take a 10-year horizon, say, or take a 5-year horizon, say, how am I going to be doing after 5 years? I'm going to position size correctly. I'm not going to take too large of positions. I'm going to follow my rules. Yeah, I may have trader friends that make a lot more money than me in the short run, but they're going to lose a lot more money than you in the short run and in the long run as well by doing that. So take the long view. Don't make this about excitement. Trading is not about excitement. It's a business. It's about numbers. It's about taking the long view, position sizing correctly, adhering to your process, and just let it play out in the long run. This chart is a perfect example of an edge that plays out in the long run. So with that being said, I did buy the SPY yesterday at the close, 292.36, opened this morning 291 even is where I got out. So it was a loss, right? Which is fine, but look what we missed out on, everybody, with this approach. Isn't that nice? So I will be buying this again here at the end of the day and holding it over the weekend, and we'll see what happens on Monday morning. But I'll tell you, this feels like a gain to me, right? I mean, it's a loss, but it feels like a gain to me right now, I can tell you that. And we will be buying it lower. All right, XLF. Okay, so we did buy this back on the 16th of August. The reason we bought it, we had to close under the 200, close back over the 200. This is a mechanical system, a good back-tested approach. Does not always win, but when it wins big. When it loses fairly small. So I did buy it here. You can see the next day it gapped up strongly. We got out of, I can't remember what percent we got out, but I think we hit 2 or 3 profit targets. So, you know, this is a key again of why I like to phase out of positions. We enter the position, our stop is a close back below the 250, the 200. Definitely looks like we're going to be stopping out of this today at the end of the day, but, you know, try to concentrate on the positive. Taking some profits up here, you actually book some profits, and then the loss, there's less loss to go around because you booked it up there. So I hope that makes sense. So that is it on the stock positions. So hit my emergency stop on AMD today. DDM, we're going to have to watch that. That's probably going to be close to the 200. SPY, we did get out this morning for a loss, but it's gone down much more since then. So we'll be buying that at the end of the day. And then XLF, we're going to have to see how that revolves around reacts around the 200. I also do have some put positions. I added 2 new put positions today, which I'm glad that I had this VIX. I did sell puts on VIX back here on the 21st with a strike price of 23.50, meaning that if the price closed above the 23.50 mark by September 20th, I would be able to keep all of the premium. So when you sell a put, it's a bullish trade. You want it to go up. I liked where we were. Here price wise. We went up. We came back down into the value zone. A little different than taking a directional trade, but I felt like it was a decent place to go ahead and sell the put. We had some support here at the 23.50 mark from this previous high that got broken through. On the weekly, it lined up with the -1 ATR channel about halfway of that big bar. And then on the monthly, we had the -1 channel underneath. So anyway, this is a 30-day put, but I've actually made over 50% of the premium just in a couple days. So if this continues to go up, if I make 80% of the premium in the first part of the period, I will go ahead and just lock in the profits. But anyway, so this one definitely helped today. So this was profitable. Qs. I did initiate a new put position on the Qs today. I picked a 169 strike price. This expires September 20th. So if the price of the Qs stays above the 169 price by September 20th, I will be able to keep all the premium. And the reason I sold it today was when volatility picks up, you make a lot more premium. in these kind of situations where we start to have big down days, but there's no signals, that's where I like to go ahead and sell puts, because the volatility picks up, the vega in options increases, and so when you're selling puts, you get more money because there's more volatility. I also like it to line up on 3 time frames, the strike price that I'm using. So this is the monthly. Again, I sold the 169s. We do have the 20-month moving average. Should have some support there. Doesn't mean it's going to, but it has it above it. On the weekly, that price lines up nicely with the previous low back in June, and also lines up with the 3rd ATR channel and 100-day moving average on the weekly, and then on the daily puts us right at about a 30 RSI. So it lines up fine on all three time frames, and that's what I like. So as long as we stay above 169 by September 20th, we'll be able to keep the premium. If it comes down here, I will be required to buy it down here. But if I do, then I'll just have to manage it if I get the shares down there. I also sold some puts today on Philip Morris. I sold the 72.50 puts. Let's see, that was wrong there. Yeah. Puts us at about a 30 RSI on the weekly, on the daily. Gets us pretty close to the 6 ATR channel, which the 6 ATR channel to me tends to hold a lot of prices in there. It's extremely rare to get lower than the 6 ATR channel. It happens, but it's rare. On the weekly, we have the 3rd ATR channel underneath this. On the monthly, it dovetails pretty nice here with the -1 ATR on the monthly. So on the monthly, it lines up with the -1 ATR. The weekly, not perfect, but I like the others, but it still has the 3rd ATR underneath. And on the daily, again, has a 6 ATR channel underneath, and it puts us about a 30 RSI. So again, the volatility, increased today, so the puts went up a lot more in value, and that's why I went ahead and sold those. So the VIX put's doing well. Just initiated the S&P or the Q trade and the Philip Morris trade. All right. Hey, Steve Burns, how you doing? Hey, Greg, headline-driven market with China tariffs, Trump tweet threats, and yield inversion. I know, it's like a perfect storm of drama today. So, this is one of those days, everybody, where it's important that you think about position sizing. You never know when something like this is going to happen. And I know when you have light positions, if the market's moving up, you feel like you're missing out on something. But these are the kind of days that will remind you that always think about risk first. Always think about risk first. Thank you for coming, Steve. Appreciate you being here, my friend. Everybody, I need a timeout for about 15 seconds. I'm watching 2 other dogs today, and I see a situation. So I apologize. I'll be right back. Okay, sorry about that. I swear, they wait till I start the podcast before they get going with their shenanigans. They think it's hilarious. Okay, so, and by the way, Steve, thank you so much for including me on your Twitter list of traders today. It's always an honor to make that, and I really mean that from the heart, so thank you very much. All right, let's take a look here. check what's happening. So we're down 565. It's unbelievable. All right. Well, listen, you guys know that I like to talk about trading psychology and some trading wisdom each day before we get into taking a look at possible entries for today. But this is from Trading Composure at VYANBYEAJEE, Trading Composure. He's on Twitter. He has a great Twitter channel. He puts out, trading philosophy, words of wisdom each day, and I think it's very, very helpful. So I appreciate that he puts out such good content, and when I see something that makes sense to me, I want to share it with you as well. He says here, the exit is where the money is made. The goal of a good strategist is to always plan the how, the where, and the when, while keeping it all realistic. And it's so true, everybody. When he says the how, the where, and the when, he's basically talking about if-then statements. If this happens, I'm going to do that. If that happens, I'm going to do this. You have to have a plan, regardless of if it goes up or if it goes down. But when he says the exit is where the money made, it's so true. Everybody can see a buy signal, but you take two people, they buy at the same place. You might have one person that makes money and you may have one person that loses money, right? And that's why I am such a fan of phasing out as the stock goes my way. You don't have to. There's other ways to do it, but you at least have to have a plan, right? If I buy at a 30 RSI, if it gets up to a 50 RSI and rejects it, that's my plan. Get out. Let me just show you a chart of Amazon. Just to kind of bring this home. Okay, we know that a buy signal over the 200 on Amazon is a decent signal, right? So if you just bought this and held this, you had a lot of profit, right? You had lots of profit. But if you just were a buyer and a holder, look what happened. Now it looks like it's going to close under the 200-day moving average. Can you imagine being in this thing with these kind of profits and not having any plan to take profits? That's what I was talking about. The two people. The one person just buys it and holds it, just doesn't do anything. The second person has some kind of plan, right? He has some kind of plan on how he's going to manage this trade. And who knows what it was? If you hit the 50, the 70 and you rejected, you got out. But that is why for me it's such a comfort to scale out as it goes my way, scaling out in prices that no one's really looking at, no one really cares. It's easy to get out. So let's see, Amazon. So this is just a good example. Have a plan. Don't let a big gain turn into a loss, right? So it all comes down to if-then statements. So, all right. The exit is where the money is made. The goal of a good strategist is to always plan the how, the where, and the when while keeping it all realistic. So thank you, Trading Composure. Appreciate that. All right. Well, everybody, let's take a look and see if there's anything out here that looks interesting today. Well, Apple, what a big down day. What a big down day. There's nothing here to buy. Here's the distance of one ATR. Here's a channel, here's a channel, here's a channel. If you get prices that move larger than one ATR range, something's happening. There's a lot of supply coming into the market, or a lot of demand coming into the market. Here was a lot of supply to the upside, here demand to the upside, here's a lot of supply to the downside. I don't like to get in front of these kind of bars because it's going to be difficult to go back up against this kind of bar because we already had so much selling. I did tell you that whenever you have a bar that comes into the value zone is the 1 and the -1 ATR channel. Whenever you have a bar that's larger than 1 ATR, this is about 2 ATRs that come into the channel, it usually goes down and will tag the other the bottom of the channel. Not all the time, but the reason I'm mentioning this to you is that based upon this, I think we probably have some further downside. I'm not going to base my trades on it. It's just an observation. When you have a bar that's larger than 1 ATR that comes into the value zone, it usually goes to the bottom. If you have a bar that's larger than 1 ATR that pokes its head here, it usually goes to the top. So we've lost all these moving averages. We've lost the 50 RSI. We are in the value zone. That's what we were waiting for. But what do we need now? I need some sidewards movement. I need some consolidation. Adobe. Well, it was stronger today, but you know, looks like we're losing the channel. Looks like we're losing the 100-day moving average. There's really nothing there on Adobe today. Silver. Well, silver's having a huge day today. You know, I've been watching silver up here. If you remember, I've been waiting for it to come back down into the value zone. See if we can get some kind of entry. It poked its head down for one day, then reversed back up. Just did not give us a chance to get back here. I can't buy it here. It's too high. 66.87 RSI. It's close to the third ATR channel. Doesn't mean that it's going down here. It's just not a good place to initiate a good trade. So I would look for the 5 to cross back under the 20 and then a move back up. We had that exact trade back here where the 5 was under the 20. The 5 crossed above the 20, and you can see that got us into a really nice trade. We scaled out right up to about here. So nothing on AGQ today, but money is definitely pouring into the metals. Advanced micro devices. This is a position we had earlier a couple days ago that I just went over. Never really took off for us. Today did hit my intraday stop at emergency stop at 30.26. Good thing I did because it's much lower now. So, you know, technically this looks horrible. Looks like we're losing the 100-day moving average here under the 50. Yeah, it all looks horrible. Amazon having a big down day today, was not able to hold at the 100-day moving average. But listen, going forward, you know, we have a legitimate way to trade Amazon, back-tested way to trade Amazon when you have a close below and then a close back above. So if we get a close back above the 200-day moving average, like say on Monday or sometime next week, I'll go ahead and take it because it gives us, again, it gives us a good risk to reward moving forward, but nothing on Amazon today. Boeing unbelievably is up today. Unbelievable relative strength that Boeing has had. You can see it was up much, much, much higher earlier. I mean, this has had a monster move. But, you know, we did go over the third ATR channel and under. We went over the 200 and under. I can't buy it here, but I just want to point out that the relative strength is very, very high. Alibaba had this nice move up. It has lost the 200-day moving average, of course, with the trade war heating up here and the rhetoric that we've had. You know, this doesn't bode well for Chinese companies, and it's reflected in the stock today, down 4.46%. So nothing on Alibaba. Caterpillar, you know, it had this little rally here, but every downtrend has counter rallies, and then a lot of times it will turn back down. It's exactly what's happening. We're to 31.99 RSI. We're close to the third ATR channel. You know, let's watch this in the future, see if we go below the third ATR channel, back above. That might be a potential entry, but nothing here on Caterpillar today. DDM is one of our current positions. With the close under the 200-day here, that is my exit signal, so I'm just going to have to obey that exit signal and get out here today if we have a close below 240, 45.28. My goodness. So Walt Disney was kind of making this little wedge here, but failed miserably. You know, on these kind of days, really take a look out in the future and say, where would I possibly want to buy this? Well, it's a 3752 RSI. If we get down close to this third ATR channel down here, we might be close to a 30 RSI. That might be a good place to enter, give us a good risk to reward ratio. Hey Frederick, how you doing, buddy? Good to see you. Thanks for coming, my friend. Let's see. Etsy. So, I mean, Etsy's down today. It's seems like it's doing a lot better than the rest of the market. It's only down 2.2%, but really no entry on Etsy for me today. Ford Motor Company, getting whooped up on, lost to 200. It's a 3101 RSI. You know, going forward in the next few days, if we can go under 30, back over 30, that might be a place to take a look at Ford Motor Company, but nothing today. Facebook. Oh, Steve exited Etsy. Oh, good for you for a 5% gain. Steve got it right there at the bottom. But, you know, I was thinking the same thing. I didn't know what you were going to do with Etsy, but if I were in Etsy at the moment, I would probably get out here too. Looks like we're losing the 10-day. We're flirting with the low of yesterday's low. Facebook, just going down. I'll be looking for something for Facebook. You know, if I could get a confluence of like a 30 RSI and the third ATR channel or the 200-day moving average, that would be a good risk to reward ratio. Doesn't mean it's going to go up if I buy it there, but it's a good setup as far as risk to reward goes. Five Below, also having a really bad day, down 5.3%, nothing there. Gold, just like silver, having a big day up here. I was waiting for gold to try to get back in the value zone, but the market just did not want it to go that low. And we have explosive move today. On gold, the move back into the value zone with the V1, V2 might be interesting. The 5 EMA crossing under the 20 EMA and then back over might be interesting, but there's nothing here today. Just like everything else, Google is getting really whooped up on here today. I considered buying Google yesterday when we had this V1, but right at the end of the day, it untriggered, thankfully. Otherwise, I would have bought that and we would have had this kind of situation to contend with. But luckily, I dodged that. But I didn't dodge it just lucky, right? It closed under and didn't give us the signal, so that's why I didn't take it. So again, with Google, I'd be looking for a 30 RSI, maybe a close under, close back over the 200, something like that to get me back into Google. Goldman Sachs is in jeopardy of losing its 200-day moving average, so nothing on Goldman Sachs. IBB is down 2.6% today. This was another one, everybody, that this one actually was luck, because entered IBB a couple days ago when we had the 5 cross back over the 30. That's a good, valid, back-tested long-term approach. Yesterday, right at the end of the market, the 5 and the 30 readings were exactly the same. And if they're exactly the same, that's an exit. So I can't remember how many seconds were left, but I looked, they were the same. I hit the sell button. At the very end of the day, it stayed above by a penny, I believe. So technically, that would have kept me in the trade. But I was out, and so I missed out on all of this, which I'm very, very grateful for. So again, you know, what do you want to do with IBB going forward? Again, I would wait for the 530 cross to give me some kind of signal on IBB. Intel. So Intel is having a very difficult day today. It's a 3785 RSI. As with a lot of these, I'll be looking for a bounce at the 30 RSI to get me back in this trade. Russell 2000. You know, I had this marked yesterday to possibly buy this if it closed above the 200-day, but it did not. And luckily, I was not in the trade, and today is a monster down day. So, you know, as far as moving forward with the IWM, we have a couple of different approaches. We could wait for the 5 to cross back over the, the 10 to cross back over the 50. That's a good back-tested approach, but we're miles away from that right now. Or look for a dip to the 30 RSI on Russell. Johnson & Johnson, my goodness. What a big down day there. We're to 36.67 RSI. We're under the 200-day. You know, to get interested in Johnson & Johnson, want to be patient, want to see if we can get a confluence of a 30 RSI at the same time. Maybe we're at the third ATR channel. That might be a potential good entry point, giving us a good risk to reward. Coca-Cola, as with everything else, it is down today. Bar is larger than 1 ATR. We still are holding the 50 RSI, which is good. Still holding the 20-day moving average, which is good. But we are now back into the value zone. So if we could get this to move sideways for a while, look for a V1, V2 entry. That would be good. That's what I'd be waiting to buy, but nothing on Coca-Cola today. Lockheed Martin's had a nice run. We do have a V2 today. Here's day 1, day 2, day 3. Day 2 washes out the high of day 1. Day 3 is closing below the close of day 1. So this is a bearish pattern. I would be looking for Lockheed Martin to come here in the value zone, move sideways, and look for a V1, V2 to the upside. MasterCard, larger than 1 ATR channel, moved down today on very high volume. Currently, it's under the 50 RSI, but we are in the value zone. So now I want to see some sidewards movement. And if and only if we get a V1, V2 signal, that's where I'll enter long. We did fortunately have a nice trade back here on the 5th of August when we tagged the 100-day intraday, and then we went under the 30 intraday. We closed back above, and we had a great trade all the way up to here, phased out all the way to there. Merck, big down day today, back in the value zone. So, you know, we have a lot of these stocks that have moved up, and now we're moving back into the value zone. So, you know, that might give us some potential entries going forward, but, you know, we have three boxes we have to check off. First box has to come into the value zone. Second box, it has to consolidate and move sideways. Third box, we have to V1 or V2. So we have a lot of stocks that have checked off that first box today. But we need all three before we can get in. Microsoft's really taking it on the chin here. Looks like it's going to lose the -1 ATR channel. Nothing there. Netflix holding up better than most, it seems, today, but there is nothing there. Possibly if we get down here, test this previous low, I think we'll have a double bottom with the bullish divergence, maybe a close under 30 back over 30 at the same time that happens. That would be a really good entry point, but nothing there today. Nike lost that 200 in a big way, so nothing there. Philip Morris, I told you that I just sold some puts on Philip Morris down at 72.50. Right now we're at 81.15. So watch and wait on that one, but no directional stock trades on this one today. If we go under the 200, back over the 200, that might be interesting, but we'll see what happens, but nothing there today. PayPal having a big down day today. The bar is larger than 1 ATR. Here's one ATR, here's one ATR, here's one ATR. So this is larger than one ATR back into the value zone. I mean, I don't know this, but in my experience, these big bars do lead to at least a touch of the negative one ATR channel. The Qs were to 41.87 RSI. You know, to look for a directional trade on this. A close below the 200, back over, that would be one. A close under the 30, back over the 30, that would be another one. Or a 520 cross. This was another one that was, you know, a photo finish for me yesterday. I was going to buy this yesterday because the 520 EMA cross is a valid EMA cross. And with about 60 seconds to go during the market, it had crossed. And so I was going to go ahead and take a full position. But in that last 60 seconds, it sold off and the 5 did close back below the 20. So, you know, the valid signal is that when it closes above, it did not close above, and therefore I didn't take the trade. And, you know, of course, it could have gone either way. It was up earlier in the day at some point, but I was lucky to not have gotten into the trade because I waited as close as I could till the end of the day. And remember, that's why I wait till the end of the day, because I feel like those end of day prices are the most valid prices. So, whew, that's nasty. Snapchat, nothing today. You know, we're under 50 RSI. We're not low enough. We're not high enough to buy. We did buy back here on the 19th. When we had this nice V2 entry here. It initially went our way, then came back. I sold it here 2 days later because when you have these V1s or V2s, they should take off and go your way. They really should. If they stall out, generally in my experience, that means kind of something's wrong. So I did sell it here. Yesterday it went up. I was like, dang. And then it went down. Had I not sold it here, I definitely would have sold it here because of this negative price action. And then, so I'm glad I missed out on all this fun here today. S&P, it's a surreal bar, isn't it? I will be buying this again at the end of the day. We did take a loss earlier from the close to the open. But it doesn't seem like much of a loss compared to the rest of the day. So I will be buying this again today at the end of the market. Square, you know, had this little rally here, but now we've given it all back. It's a 33.72 RSI. If we close under the 30, back over the 30, you know, might be an interesting place to possibly take an entry, but nothing on Square today. SSO, this is the double leveraged S&P. Boy, that's nasty. TLT are bonds, so money is going back into the bonds. This is causing the inversion with the yields, and so yeah, money is flowing back into safe assets here on it after today. So, but nothing there. That's just too high for me to buy. Tesla, it's coming down, testing this previous low, but there's really nothing there today at all. Twitter, big down day. But we are in the value zone, so if we can start holding something here and then get some kind of trigger, remember, go back into the value zone, that's step one. Step two, we need it to move sideways. We need to show that the selling pressure is deleted, and then we need some kind of V1, V2, a spike down, test the waters, doesn't like it, back up, would trigger us back into a trade. Natural gas. Was working on a V1 earlier. This would be a higher low V1, but the close right now is still below yesterday's close, so nothing valid there. United Health Group, you know, there's nothing there today. It's a 31.18 RSI. You you know, I could see how somebody might be able to take this trade here. It's a low 30 RSI, and we did catch support at the negative third ATR channel. It would set up a decent risk to reward here. Let's look at the weekly. It does have the -1 ATR channel underneath it on the weekly, which is positive. But, you know, given the type of day we've had today, especially because it's the weekend, I'm going to be extra conservative here, and I'm going to let this go. But if this does go under the 30 and back over the 30, that might be an interesting point. Oil got whooped up on today too, so nothing going on oil. Whew, look at the dollar, everybody. That's a big move on the dollar. We're back in the value zone. So if we had a V1, V2, could we take it? No, we couldn't, because we don't take V1s, V2s up against big bars. So this has a lot of work to do. This is like throwing a big rock into a lake. There's a lot of commotions. We need to let the water settle down, things settle down, get the emotions out. Well, my VIX is doing pretty well today. I gotta say that, right? On my puts. So that is at least one thing that's going our way today. Verizon, what a day down. My gosh, what are we at? Are we over 600? Yeah, we're closing in on 680 points down. Unbelievable. Walmart holding up pretty well, actually. We are back into the value zone, so you know, if we could get this thing to move sideways a little bit, consolidate, look for a V1, V2 entry back up, that might be interesting, but nothing quite yet on Amazon. It's holding the 50 RSI, which is interesting. But again, if I were to just buy it here based upon the 50, it would just be an anticipation trade, hoping that it would hold. I want to see it go underneath and then back over. XLE, my goodness. Steve, if you're still listening, I'm sure I'm really glad you got out of that triple leveraged when you did up here, like the smart guy you are. Could you imagine that'd be over a 10% down day on that triple leveraged? It's a 32.61 RSI. If we go under 30, back over 30, you know, there's some potential. XLF, I do have this trade. It's closing under the 200, so I'm definitely going to have to get out of that today. Real estate, bearish engulfing bar to the downside. That is nasty. That is nasty. Does it mean I'm going to go ahead and short that? No, I wouldn't. The way I would look for a short on this was if we could rally back up to about halfway mark, because there are going to be some dip buyers here. And if it goes up and fails at that halfway mark, then they will probably bail. Then you'll have some shorts coming in. So you'll have two groups of sellers, and that will probably drive the next leg down. But it's moved a little too far, too much for me to be able to short this today. Look at the utilities, everybody. Unbelievable. That is nasty. Nothing there. Healthcare. Oh my Lord. Look at that, everybody. Unbelievable. Obviously nothing there. Pharmaceuticals they're not, okay, so I'm not going to buy anything here today. I do want to point out though, see how we make this move down and how deep these bars are? Then we have this nice rally. Now we come back down, we're lower than the previous low. See how the bars here are less deep than here? So this is setting up for a double bottom with a bullish divergence, but there's no real trigger there yet. So I do not see anything at all to buy here. So I'm going to turn my attention to getting out of what we need to get out of. Luckily, we got out of AMD when we did up here. Thank goodness. DDM definitely looks like it is going to be leaving the station for us. So we got to get our roundup out and we got to sell this stuff. So let's get rid of DDM.
Order partially filled.
All right, DDM is
Order
gone
filled.
there.
Order partially filled.
DDM is gone.
Order filled.
All right.
Order partially filled. Order filled. Order partially filled.
All
Order
right.
filled.
So I got to put in my order for, I got to put in my order to buy the SPY.
Order cancelled. Order cancelled.
All right. So we have an order in to buy the SPY. XLF definitely closing below, so we're going to have to get out of XLF. Boy, what an ugly day.
Order filled. Order filled.
All right. So that is going to leave us only, I'm flat now other than the puts. So we are flat and going to be buying the SPY at the end of the day, but that will be, other than the puts I have, that will be the only position that I have. I got to tell you, when you have a bad day like this, try to think of the positives. And the positives were we were fairly light going in today. And not only were we fairly light, we didn't get into 2 trades yesterday. One of them was a photo finish. It just happened to go my way, IBB. And the second one was the Qs that I waited as long as I could till the end of the day to show me that it was not going to trigger. So it could have been a lot worse today. It's a brutal day, but I really want to counsel everyone out there, when you have a brutal day like today, when you get punched in the face, don't try to make it back quickly, guys. If it takes you a month or a month and a half to make back something like this, then just do it. But if you start revenge trading in this market, if you start thinking, well, everything's too low, it can't go any lower. Oh, yes, it can. I've been through this so many times. It's better to just sit on your hands, let the drama work itself out. And when you finally do get a position, just because it's low, don't say, well, I'm going to take 2 or 3 times the position now, right? Always stay to your guns, stick with your conservative approach. Remember, this is a long-term endeavor. It's not a week-by-week endeavor, right? Trading. It's a long-term endeavor. Position size correctly, take the right trades, get out when you're supposed to, and let the market's edge work for you in the long run. Just like here on the SPY, right? In the long run, this works. What about if you would have loaded up right here, had this huge down, then you'd be out of the market and you would have not been able to participate in this. So my best advice to everybody, think of trading as a long-term endeavor, 1 of 1,000 trades. You're going to make some, you're going to lose some, but if you're trading something with a good edge, you are going to you're going to keep in the game and let that edge play out. So we're down 625 points now.
Order cancelled.
Whew, boy, oh boy, that was it. What a day. 619 points down on the Dow, but 239.62 down on the NASDAQ, down 3%. That's a big stinking day. That is a big stinking day. All right. So Listen, sorry I haven't got to your comments. I'm going to get to those in a second. Before I get to those, I just want to put in my daily plug, let everybody know that I do offer private one-on-one teaching and coaching and mentoring lessons in the evening time via Skype. So, if you've been thinking about doing some one-on-one lessons with me, please reach out to me. My number or my email is in the description of this video, and my hourly rates are as well. I think one of the main advantages of doing, two main advantages of doing one-on-one is that first of all, I want to get to know you, know about your trading, know what your challenges are, know what your goals are. That way I can put together a customized lesson plan for your situation, not something broad for everyone, but just specifically for you. And then the other thing is that, you know, during the live stream, I'm the one that's teaching it all the time and you guys are just listening. But when we do one-on-one, after I teach you, I have you teach it back to me. And if you have to teach it back to me, then I'll know if you really know it or not. And if you don't, we'll keep going until you know it. So anyway, if it's of interest, you can reach out to me by email, and you can also send me a message on Twitter. And then also, if you like this channel, if you're learning something, if it's of value to you, please do me a favor and hit the thumbs up button. It does help with Google to, promote the channel out there and make more people aware of it. I do get a lot of emails from people thanking me for the channel and that it's, help with their trading. And that's why I started the channel. So, if you could help me get the channel out there, just by, at the very least, by hitting the thumbs up button, I would appreciate it. All right. Mount Doji says, hello, hey buddy, what's going on? Don't be too sad. Okay. Oh, Wayne K says, what's your expiration when you hold SPY options on the weekend? Well, Wayne, I don't have, sorry, I've got an F-35 going over the house. I don't currently have any SPY options, so it's kind of hard to answer what my expiration would be. I mean, sometimes I trade weekly, sometimes I trade monthlies on options. So maybe I didn't quite understand your question, but if you say, what's your expiration when you hold SPY options over the weekend, I can't really give you an answer because I don't have enough information there. But I appreciate you coming by, Wayne. And like I said, if you want to rephrase that, I'm happy to re-answer that. Also, Lemina, I hope I got that right. McDonald, MCD. You want to take a look at MCD? Let's do it. And I have a whole squadron of aircraft going over. Sorry. Yeah, so McDonald's, oh my gosh, what is happening? All right, so McDonald's here, I mean, obviously had a big down day. We are inside the value zone. That's where I like to see stocks come. My favorite thing to do is buy in the value zone, sell as we get up to the third ATR channel, or short in the value zone, cover as we get down to the negative third ATR channel. Right now, we are back in the value zone. So, right off the bat, this is better than trying to buy it up here. But we have such a big down bar day right now. We need the bars to settle down. We need to see that there's less supply coming into the market. We need to see it start moving sideways for a while, couple, 2-3 days at the very least, and then attempt to go down and move back up. That would be the entry for me. I would need a V1 or V2 entry for me on this one right here. So nothing on McDonald's, but it has taken the first step to getting into the zone where I would consider buying it. Hey Murat, how you doing, buddy? Murat says SP has very weak volume today compared to the other large negative bars in your chart. Well, if you look at the S&P volume right here, Murat, at the end of the day, it is pretty high. It's not the highest. It's probably lower than some of these down bars over here, but it's still relatively high. Let's look at AMD. Yeah, it's pretty high along all the way around. Murat says, I hope Twitter goes all the way down to 39.30 in this turbulence and closes the gap. This is ready for real takeoff. Well, let's take a look. Yeah, well, I mean, I like where what did you say? You said 39.30. So the gap back here. Yeah, right around in this area. Yeah, I think I think it would be good also. There should be some support there at the high of that gap up day. But we are getting back into the value zone here, right? So move sideways. I know I've said this all day long, but it's the same pattern with a lot of stocks. Here we have a bar that's larger than 1 ATR. We need these bars to start narrowing. We're in the value zone. We're in a location where it's okay to buy. We just need it to consolidate, show us that there's no more selling coming into the market, consolidate, go sideways, and then look for a V1, V2 to the upside. Steve says, I got out of ERX with my life intact. Holy moly. Yeah, I know you did. That's why I said I am so glad that you got out of that trade when you should have, and that's exactly what happened. I can't remember where you got out. I think you either got out yesterday or 2 days ago, but this would have been nasty. So Steve's a master trader. He knows when to get out. Frederick, it's like we are trading the Trump tweet. It's similar to a casino. Yes, I 100% agree. Boy, the power of those tweets, unbelievable. Frederick says, you must know that Trump's casino business bankrupt, and I think it's created a huge problem for Atlantic City, so the scale of the bankruptcy might be enormous this time. Yeah, that's a good point, Murat. Murat says, it's crazy to see pharma and healthcare stocks responding this negatively. Will people get less sick because of trade war? That is a good point also. That's why about the only thing that stuck out to me today that at least is somewhat setting up here is the pharmaceuticals. We have this low, we have a rally, we made a lower low, we have a bullish divergence, but we have to wait for some kind of trigger here in order to get in. And volume was very low on this one. Steve Burns says, I'm thrilled with 4.03% gain in ERX on that last trade. Oh, is that how much you made? Good job. It is now down 11.63% today. Unbelievable. It is. Murat says, is China buying oil from the U.S.? No, I don't think so. I think China just throws a big stone in the water to create large waves. China is playing its cards very well. Yes, I agree. Murat says, or Frederick says, Murat, let's roll the dice. Out of the day with my position, just came back to my computer and see a bad day. Did not touch the emergency stop minus 5%, by the way. I will see Monday. Okay. You had something up 1.3% today? Holy smokes. What is that, Murat? Murat, other two is down. One of them is Twitter. Yep. Lantes, tough market to navigate. Thank you for the words of wisdom. Well, I hope it helps. Lantes, yes, it is a very difficult market, but again, everybody, the only thing you have control over is when you buy and how many shares you buy. And if the market, you have to look at the market in the long term. And to me, position sizing is everything. Because if you position size small, even on big days like today, it's going to hurt, but it's not going to, hurt the integrity of your account. It's going to keep you in the game. It's going to let you play the long game and let your edge work out. But if you bet everything on any one particular day and you're wrong, well, you're done, right? You'll never get the experience to know how to become a good trader. You have to take the long view on this. It's just a bump in the road. That's how you have to look at it. Frederick says F-35 to China. Man, I'll tell you what, I have those, I live near a military base, so I have those fighters go over, but I mean, there must have been like 11 of them up there. It was super loud. Sorry about that. Wayne, yes, you answered it. Okay. Hope that helps, Wayne. JT, can somebody please create an indicator for our chart called Trump tweet? Man, if we only knew, right? If we only knew. Boy, what a day. Well, it looks like things are up in the aftermarket for some reason. I don't know if anybody's checked the news. Yeah. Oh, by the way, we did get our new signal here, 2489 or 284.89. Man, I'm losing my voice today. Yeah, in the extended hours, the market's up. So that's good. That's good for the one we got at 284.89. Right now it's at 285.49. So about 70 cents. So anyway, well, this is real trading, everybody. This is how it really works. So remember this day. Remember to always be conservative when you position size, because you never know when something like this is going to happen. Murat, oh, it's BWLPG trading on Oslo. Okay, so I can't pull it up here. Murat says, I think what is going to happen is that the market gets less responsive to Trump tweets after some time. Yeah, it seemed like that did happen for a while, that people started to not take them as seriously, but I think he used the word enemy in one of his tweets today in regards to Jay Powell and also China. So, I mean, that's not so great. That certainly doesn't help in negotiations. Frederick says, do the stock who are up today are all the stocks to focus on the future? Do the stock who are up today are focus on the future? I'm not sure what that means. So it should be interesting this weekend for headlines. Should be interesting to see what the market does. Again, I'm really grateful that we were light today, that I was light today. I'm grateful that I didn't get into the Qs yesterday because that crossover uncrossed right at the last second, and then lucky on IBB in that I ran out of time and I couldn't get out. So sometimes they work for you, sometimes they work against you, but this was one of the times it worked for us. So yeah, other than the overnight SPY trade, I am totally flat other than the puts. So we got the puts on the VIX, so that was a nice up day on the VIX for us. Again, on the Qs, I wrote this down here to 169, so we'll see if that 169 can hold by 30 days from now, and Philip Morris, see if the $72.50 mark can hold. I think this is about as light as we've been. All right. Does anybody have any other questions? Please let me know. All right. Well, if there's no more questions, then I guess we are done for the week. What a week, huh? Oh, Frederick says, I mean, the stocks who are up today are the strongest stock in the turbulent market. Yes, yes. Such as Boeing. Boeing ended up $1.60 on a day like to this. So, that's called relative strength, Frederick. And I look at relative strength a lot. If a stock can buck the market, I mean, if it was up $1.60 on a day like today, imagine if the market was up a couple hundred points, where this thing would have been. So listen, if you guys have any questions that you didn't ask today or forgot to ask, feel free to send them to me over the weekend by email or by Twitter. I'm happy to answer them for you. But Frederick, my friend from France, thank you for coming by. Appreciate it. Murat, good seeing you. Thank you for the great comments as always. JT, way to go, my friend, being in cash 90%. That is awesome. Proud of you, and you can just sit there and wait for a good setup, and that's really what trading is about. And Wayne K, sorry I couldn't help you on that very much, but I don't have any options that I wrote on the SPY, and it's hard to say what expiration I would use, regarding the weekend, unless you're trading weeklies. Some people won't write another option till after the weekend, so they don't have to hold through the weekend. Lantes, thank you for coming by. Appreciate you spending your time here, and you are certainly welcome. I hope those words of wisdom are helping. Steve Burns, thank you, my friend. Thanks again for including me on your list. And I saw that you are all in cash as well. So I'm in good company with the cash, except for the SPY. Also, Lemenya, hope that helped on McDonald's. Appreciate you coming by. Mount Doji, good to see you, my friend. And did I miss out? Brian, our friend Brian 512. So thank you everybody for coming by today. I really do appreciate it. And do something nice for somebody this weekend, right? Just go out, say hello, hold the door open, give them a smile, just be nice. It's going to be good for you. It's going to be good for them. And I hope everybody has a good weekend. Hope it's fun. Hope it's safe. And hope to see you back on Monday. And we'll see what's going on with this crazy market. So take care, everybody. Appreciate you coming by. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.